What is up, everybody? Tyler here from Vant Trading, and today I'm bringing you another 2021 analysis, but this time it's going to be on oil, where oil's at now, where we think it's going, and what we think the road ahead looks like for oil. But first, before I do, I want to pop on the screen and thank everybody who has subscribed and is watching all of our content and videos. We do this for you guys. We love teaching and giving out our analysis. So if you haven't already, please hit that subscribe button on the screen, like the video, and we wish you the best of 2021. Let's get started. So the main reasons we're going to see some volatility in oil this year is four things we're looking at, right? The first one is global demands. Now, the EIA expects demand to increase by 5.8 million barrels per day in 2021. Now, if we're increasing the demands, the global demand, that means that, oil is going to keep pumping higher because the demand's increasing. So that means the price will increase. Second thing is rising U.S. oil production. Now, U.S. is continuing to increase their production, and they're expected to reach 11.1 million barrels per day in 2021. And comparatively, in 2019, U.S. was the world's largest oil-producing country with more than 12 million barrels per day. But now we're trying to kick back in gear since 2020 happened. And now we're going to start producing hopefully 11.1 million barrels per day and then start to increase from there. So we're trying to take over that largest oil-producing country and that big control, which leads me to number three, is diminishing OPEC power. Now, the U.S. is slowly taking control of the oil market and controlling prices, because if OPEC, which is, all the countries over there like Saudi Arabia, Russia, if they are having diminishing power and they're trying to decrease production, if the U.S. decides to take it in their own hands and increase pricing, increase production, then that's what's going to happen to oil. Oil is going to follow the U.S. because we are, since we're actually the largest oil-producing country, we're going to have the largest impact on the oil market. And with OPEC being slowly diminished and less powerful, I think that it's going to be positive, because as we start increasing production, the demand start increasing, and we'll control the oil market. And lastly, the fourth reason is a drop in US dollar. Oil and the dollar will be inversely correlated because oil is a risk on investment. So if investors are ready to be risk on and take riskier trades this year, that means we're going to start looking at oil, and vice versa. The dollar is a safe haven. So if investors are looking for riskier trades, they're not going to invest in the dollar. They're going to invest in oil. So if you look at my last video explaining why I think the dollar is going to drop tremendously in 2021, that will give us a reason that oil should then increase in 2021. So those are the four main reasons to look at this year as far as, where oil is going to go. But now let's head on into oil outlook and a few other things more in depth on why we think that the oil will continue to increase, right? So like I mentioned, the IEA, they estimate global oil demand will return to pre-pandemic level in 2023. Now, that's a very safe estimate. It is very tough to tell because we don't know when people will be back in office, back to normal business travel. However, most analysts and banks, which I will talk about a little later, are expecting a full recovery by the end of 2021 and some. And honestly, that's what we're expecting too. And we'll get into the reasons why we expect that. But the IEA is giving a very safe level there for 2023. Secondly, vaccine, it should really help speed up the demand curve. As you know, the one thing everybody's looking at right now to get back in business, back traveling, back doing their same work, work travel, business travel, back in office. Everyone's looking at the vaccine, right? Because the whole reason that we're having this issue is COVID. And how do you fix that issue? Well, you have the COVID vaccine. So we're really watching that. And we're really hoping that can come front and center, because the virus and the vaccine is actually front and center. And if we're going to have a 2021 rally for oil, those will be the things to look at, the virus and the vaccine, because hopefully by the summer when the demand naturally rises and you have that continued vaccine rollout, we'll start getting out of that $40-$50 range into the $60 range. And then hopefully we'll hang out by the end of 2021 in the $60 range. And then another reason is gasoline demand and jet fuel recovery. This links directly to the energy transition and the green economy. It's a Biden play. So that's something we're looking at because typically towards summer and then towards the end of summer, you get that jet fuel recovery. People are flying more for vacations and stuff. You get that gasoline demand where people are going to be traveling around and using up gasoline, going to schools and stuff. So that, is another reason we're looking at into the summer of, hopefully a sustained move in oil and a recovery is those two demands, and there's a gasoline demand and jet fuel recovery. Moving on, the OPEC Plus and the U.S. will be key to this rebound. Now, I mentioned that before, if OPEC, if they're going to increase production and try to stimulate the demand in oil, then the U.S. will most likely do the same. But the one big thing is we need Saudi Arabia and Russia. Their relationship needs to stabilize because right now they're having issues to where Saudi Arabia wants to cut production, Russia wants to rapidly increase production, and they're fighting, and we're all fighting for the same market share. So we need everybody to get on the same side, same page, same good relationship if we're going to have a stable oil recovery in 2021. So that's one thing we're looking at as well. And this video is being filmed a little into January, so we already know that Saudi Arabia is cutting their production at the start of 2021. So that's a very positive thing for oil. It's hopefully going to help the supply issues with the and then increased demand, getting oil back on track. Russia's being a little picky right now. Keep in mind, though, any more clashes with China can disrupt the oil market. That's going to cause people to kind of go in their hiding and not be a risk on. If we're going to have political and global issues and clashes with China, then you're going to see people kind of go in their hiding for a little bit, and the oil market will take a little bit of a hit. Now, I did mention, look, I'll say what the experts say. Two big groups out there that I could find that came out and talked about it. One is Goldman Sachs. They expect oil prices to reach $65 by the summer of 2021. $65. Now, I'm honestly not surprised. That's, really what we're looking at as well, that $65 range. And in the next chart, or the next slide, I'll show you why, because I have a chart of oil. But Goldman Sachs is expecting a $65 by the summer. And I can see that as long as COVID and the vaccine treat us well, right? Because jet fuel recovery comes back in the summer, gasoline demand comes back in the summer. You have plenty of months, 6 months of vaccine rollout. So hopefully that gives us a speed up in oil and speed up in recovery in a global recovery. And Goldman Sachs also, they did say that they're expecting that mainly because it's going to be driven by the output cuts in Saudi Arabia, which just happened, and which is going to help a lot with the supply issues, and the implications of a shift in power to the Democrats in the U.S. because the Democrats are going to stimulate the economy, and hopefully that will therefore stimulate oil, right? And then lastly, Citigroup. Everybody knows Citigroup. They predict oil to average around $55 with a hike to $60 by the end of 2021. Little different than Goldman Sachs. They think it's going to be a little slower of a recovery, but they do ultimately think it'll hit 60 and it's going to average around 55, which was more or less pre-COVID numbers. So that is good as well. So you have the experts on our side, the IEA, it's more or less on our side. They're looking at a recovery, but a little later than what we expect. And, us as a fund, we're expecting that same recovery Goldman Sachs is mentioning. So here is a weekly chart of oil. Now, obviously, if you look at the chart now, it's going to be a little different because I don't know when you're looking at the chart. And this was at the start of January. So this is missing 2 weeks, because if you take a look right now, oil is creeping up on this 54.45 level. So, it is a little late, but I keep mentioning, if you watch our show at 1 p.m. Monday to Friday, every day I talk about oil, and I keep saying this level right here is the February of 2020 high, right? That's actually really the start of the drop from COVID. And that's when you saw this move back down to zero, actually went negative. But that's where that whole all started. This is the scene of the crime of COVID, right? And now we're creeping back up on it. So this will have a very significant level of resistance. As you can see back here in 2017, it did. Right over here in 2019, that's where it sat. That's where the floor more or less was. And now in February 2020 high, that's where that drop of COVID was. So you're going to have some significant resistance at 44.45. And this has already been a very deep move, very steep move for oil, the recovery. And so I do think that you're going to have a little bit of hesitation. It's going to stall there. It might pull back to 50. But I think if we want to see that continued momentum and stimulation in oil, it needs to hold that 50 level. Because if it drops below 50, it's really proven to come back even farther. Like, as you can see, drop from 50 here, pull back, drop from 50 here, pull back. This 50 level, every time it hits it or drops below it, even up here, it was above it, right? Dropped below it and came back down to 44. So I think that if it needs to hold 50 in order to really get this momentum back in. If it starts breaking 50, you'll probably see a move back to 44 right here, this level, before it then starts curling up back into the high 50s, maybe 60s. So I think what we're really looking at is it's going to hit 54.45. It's going to pull back maybe to 50 area, and then come closer to summertime, just before summer, maybe March area, you'll probably see it rally up and break 60s and come back up into pre-COVID levels right up here in this range here. And then I'm not sure if we'll hit 65 by summer. We very well may. It just depends on the vaccine rollout, how COVID handles throughout the year. But I definitely think that we'll hit 65 by the end of the year, because that'll give us enough time to roll out COVID. It'll give us another whole year on doing the vaccine rollouts and getting the demand stimulated. So I do think that we'll hit the significant 65 level, which is really where the start of that drop was, if you look at it, which was December of 2019. So that's really where the start of that drop came. So if you want to call that the ceiling crime, go ahead. But the real ceiling crime from COVID is right here. But this was actually the start of the drop. So that's why I think around 65 is what you'll see by the end of 2021. So you should see some price fluctuations in $50 to $60 range for a few months, for a good bit. So we'll move on to the next chart. This is oil in 2008 versus oil in 2020. Obviously, you see in 2008, during the financial crisis, it took a really big crash. This was about a 70% drop, and then it slowly recovered. It took like a couple years to only get to really halfway where that scene of the crime was, right? But it's a little different of a situation there, because it's not as easy as creating a vaccine, getting rid of COVID, and stimulating the economy again. You had to fix the whole entire financial industry, right? So that's why it had a little bit slower of a recovery. However, you do see in the chart I'm going to show you next, the seasonality of oil. This comes into play really well, right? Because you have January right here, January to the summer months, July, August, it's starting to move up and then kind of move sideways. So what I'm really trying to show you is the seasonality of oil from February all the way to summer, like September, October, is where you'll see that really run up right here, which is what we saw in oil in 2009. And then it kind of just did its thing sideways for a little bit here. And if you look at really October to December, that's typically where you see a drop, a pullback. But now, October, December right here, that's a little bit more of a muted pullback. Yes, you had a pullback, but it's not going to pull back all the way, all the way down. So I'm expecting something similar, right? We had this big drop from COVID right here. This was actually even more than 100% drop, but I'm just going to call it 100%. and now it's marching its way back up here and mostly because now we're having a vaccine rollout. Demands, we're kind of getting the hang of COVID a little bit. Demand's coming back. And so, right now, 2021, we're in January. January, you see that little bit of a pop here. You'll probably see a pullback to 50, and then it's going to go, right? And I'm about to show you the oil seasonality chart from February on is where you see that big pump, right? Well, I think from 50, from February on, you'll see that $50 move up to 60. And then you might see it consolidate for the summer months around 60, maybe pull back a little bit and then break out to above 60. So, that's really what I'm looking at for oil and how it's put and how I think it's going to play out. So if I show you this next chart, January is, right here, you have a little pump up, which is what we're seeing right now. We're seeing that little pump into the February high. Then we'll probably see that pull back to the 50 level. And then from there on, you see that run up in the increasing demand heading into the summer, right? And then you see it go sideways and pull back. Well, if you go back a chart, you have that, you can't see it yet, but we have that January run up, pull back to 50, and then it runs up, throughout the leading to summer. And then summer might consolidate around 60, pull back, and then we might go into 65 area by the end of the year. And because if you look over here, I did mention that, you had that pullback by the end of the year, but then ultimately in December, it ran up and still broke highs, right? If you look at seasonality, it says you pull back at the end of the year, and then December it runs up, right? But that pullback's a little more muted than what it shows right here, right? So I think we'll have a little bit more of a muted pullback from 60 to like maybe 54, and then we're up to 65 in December. So that's what we're looking at heading into 2021 with oil. If you have any other questions about what we went over, anything you have, any comments you have, concerns, please comment on the video or reach out to us, DM us, and we'll get right back to you. And thanks for tuning in. Safe trading and have a great year.